Well, as we take another look at our commodity trade here on a Tuesday, I wanted to point out that we had some new information that just crossed the wire from USDA. It is our weekly report that we normally get on Monday, but due to the holiday yesterday, it's coming out today. It's our weekly export inspections numbers. And here is the latest information. Okay, on the corn, we had 345,859 tons last week. That compares to 483,559 the week before, so a sharp drop off there. And in case you're wondering, a year ago, that number was 1.13 million. Wow, only a third of what we had a year ago. Sorghum, 18,875. That's just slightly under what we had the previous week. Soybeans came in at 1.2 million tons. That's slightly above the previous week when we had 1.15. A year ago, it was 1.13, so fairly consistent there. And on the wheat, 435,129 tons. That's quite a bit under the previous week when we had 560,976. And a year ago at this time, that number was 524,942. So we go to the phone and welcome Brian Hoops, the president of Midwest Market Solutions in Springfield, Missouri. Good morning, Brian. Thanks for joining us here. The export inspections numbers, do they mean much to the market at this point?
Well, good morning, Marlon. They're not anything outstanding. The soybean number is good at 44 million bushels, but that corn number and wheat both are pretty disappointing, well below what we need to be reaching on a weekly basis, hit the USDA forecast for corn. The wheat number is right in line with that number, but if we can't pick up this corn pace relatively soon, and really our sweet spot for marketing is going to be January and February, so we really need to be improving our exports right now before Argentina and Brazil corn gets harvested in March. Our forecast is going to be that the USDA is going to have to lower their export forecast once again in the next supply and demand report. So, these numbers are vitally important, and we're not anywhere close to hitting where we need to be on a weekly basis to hit that USDA number. And that is going to be a disappointment to the trade because fundamentally it's going to be hard to justify higher prices or even these prices that we're at right now unless we get better export news.
Right now, March corn is 2 cents lower. We're trading at 387 1/4. We have December new crop at 401. That's down 1 3/4, so it has been a little weaker than what it is right now. It's actually gaining back about half of what it lost at the open. On the soybean side, though, wow, double-digit losses all day long, and the March still down 13 cents at 916 3/4. Interestingly enough, though, the wheat market has turned higher. So in Chicago, March wheat now up 6.5 at 577. Kansas City, after a very soft open, is now trading 1 3/4 higher at 496. And the Minneapolis wheat has been trying to claw its way back. It has March up a half cent at 560.5. What's going on with the wheat here, Brian? What do you hear through the grapevine as far as why Chicago wheat is leading the way?
Well, I think, the stocks in Chicago wheat, soft red wheat stocks, got very, very tight this fall. And even though we planted more acres to soft red wheat this winter, they're not going to be harvested until the spring and early part of summer. So with the tight stocks, we're seeing pretty decent demand for that soft red wheat. And now we've got a situation where March has actually been gaining against the May contract. Through most of the winter, it held a 5, almost 6 cent discount. Now we're back to even, or in fact, March is starting to trade above May, and that's a sign of bullish demand when there's more demand for that front month than the deferred. We are seeing pretty decent demand for soft red wheat. Overall, our wheat demand has been fairly soft, but that soft red wheat, we're seeing a big end user type buying that's driving March above the May. Speculative buying is also coming into this market, and that is lifting futures here as most of the specs will try and buy a soft red wheat or the Chicago market rather than Minneapolis or Kansas City.
By the way, March cotton currently down over 200 points, and it's trading at 69.18 right now, so we'll keep an eye on that too. We'll come back in a moment. We'll talk more with Brian Hoops about our livestock trade after these messages. Come on back. Let's turn our attention over to our livestock trade, and we have Brian Hoops on the line, the president of Midwest Market Solutions. As we look at the cattle market today, Brian, we have to keep one eye on the future here because tomorrow we're going to have a cold storage report, and then Friday we're going to have a cattle on feed report. Interestingly, just like we saw a lift in the wheat market, now we have the live cattle starting to firm up. So after a lower start today, February now up one tick at 126.38. The April contract now a dime higher. So is June, for that matter. It's up a dime at 119.30. The only one lower right now is August, which is a dime lower. Now on the feeder cattle side, here you have the January down 32, March only a dime lower now at 144.90, so it's coming well off of its earlier low this morning, working its way back toward unchanged. On the lean hog trade, right now you have the lean hogs showing February 20 higher at 67.88 and April now 33 higher at 74.42. So, Brian, after a weaker start all across the board, the entire livestock complex, everything's starting to firm up here. Have you heard why?
Well, we're starting to see a little bit of, end user type buying. There's ideas that the export numbers later this week could be somewhat friendly for the both the pork and the beef complex in here. I would be surprised if we continue to move higher as we have, no cash cattle trade yet. Cattle on feed comes out on Friday. That could be a little bit negative. So your cash trade's probably going to occur later in the week, close to that cattle on feed report. And I think you're going to see some of the trades starting to position for a somewhat bearish report this week until the cash bid and ask start to come out and stabilize the market.
So that cold storage report coming out tomorrow, is that typically a market mover or not?
Well, it can be. In this time or last couple reports, it's been pretty friendly to beef, showing a drawdown in stocks because we have such good demand for that market. So, yeah, that could be a positive factor for the cattle market on Thursday morning. That report's released on Wednesday afternoon.
Okay, a quick look at our pre-report estimates for the cattle on feed report that comes out Friday. Everything's expected to be higher than a year ago, and they are looking for an on-feed number to be at 102.2% of a year ago. Placements 103.2, marketing's 105.2. Thanks, Brian, for the visit. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. There you go, Christina.
All right, we'll keep watching, see what the day holds. Thank you, Marlon. Appreciate that.